Thank you very much, Mr. Khosla, for joining us at the Money Control Startup Conclave. We have a room full of founders, budding entrepreneurs and investors waiting to hear from you. Thank you very much, sir, for speaking to us.
Well, I always enjoy talking to entrepreneurs, so it's always a pleasure.
Mr. Coastla, before I get to entrepreneurship and investing, I must ask you, what do you make of the cage fight between Elon Musk and Mark Zuckerberg? Who's going to win that one?
I don't know about that, but the more important fight is between Threads and Twitter. I think that'll be the determinant of the winner.
You've actually cued me to my next question. Have you joined Threads? And are you going to leave Twitter?
I'm not going to leave Twitter, but I'll probably join Threads too and be active on both. They're great learning platforms for me. I learn a lot from those Threads.
Great. So we look forward to following you on Threads as well. Mr. Coastla, we are talking to you at a time when, we're seeing a lot of bad news when it comes to the Indian startup ecosystem, at least. We've been reporting on layoffs. We've been reporting on governance lapses at some startups. Funding has taken a huge hit this year. Funds are also going for down rounds and repricing valuations in some of these startups. So to founders today or budding founders who want to start up, what would you say to them?
I'm an optimistic sort of person. So first, the funding environment is hard. But all that means is your competitors are also not getting funded. And so the capital efficiency of your startup, how much money it takes to build a startup, will be a lot less. So capital efficiency in startups will go up. It's a call for investors to also invest because they'll be more efficient investing. But it'll also be capital efficient for entrepreneurs. They won't have to engage in marketing battles with competitors. Also, with all the layoffs, for really good entrepreneurs, it's a perfect time to hire. I keep telling our entrepreneurs, hey, fire the bottom 20% of your company and rehire them because the potential pool of employees is very large. So that's an optimistic view of that. I would also say I look to adversity for the really good opportunity. When things are going great and there's euphoria, it's a bad time to invest for investors. Also a bad time for entrepreneurs because both good and bad plans get funded. But you look at today's environment, we will look back 20 years from now at today and say there are two really unfortunate events in the recent past. One was COVID, of course. Another was Ukraine. I would venture to guess we have to make the best of those really unfortunate events, and it'll create much more opportunity. COVID especially has created a huge opportunity for India because everybody is trying to get out of China or not be dependent on China. India has the right population, right demographic, much younger population, very well-educated population. So India is in best position to take advantage of all the global changes that will come from the COVID events and the Chinese management of COVID. So it's a real opportunity. The other was the Russian invasion of Ukraine. As disastrous as it is for Ukraine, we know the world is on a path to energy independence. Energy transition and the related climate transition will be a huge opportunity for a lot of people. So I would say, as an optimist, looking at the bad side of things, and nobody wishes they would have happened, but now that they've happened, these crises would be a terrible thing to waste. And it will create an opportunity for entrepreneurs.
Right, that's a very positive message. But what would your message be for investors? They are holding on to the huge funds they've raised in the last few years. A lot of them are sitting on money. When are they going to open up their purse strings?
Well, I would say to them, as Warren Buffett says, when others are fearful is the best time to invest. That is Warren Buffett's advice. I totally subscribe to it. So this year, we've been very, very aggressive and active in our fund. not fearful like some people.
Right. How is right? In
sorry,
fact,
go ahead.
that was my follow-up question. How is Coastla Ventures doing this? Are you doubling down in a year where everyone else is fearful?
We are definitely very actively investing because valuations are much lower now than they were. Frankly, we had unsustainable valuations and now they're reasonable. And so it's a very good time between reasonable valuations and capital efficiency of investments. Because every field doesn't have 10 competitors competing with each other. It's a time to build really great companies. You build them slower with less burn rate. You build them for the long term. And you'll build better companies and more resilient and stable companies. So I'm very optimistic. So I've talked about the negatives and the opportunity that Ukraine has created and the opportunity that COVID created. But then there's the phenomena of OpenAI and AI. It's a massive opportunity everywhere, and especially in India, because India has so much technical talent to take advantage of that opportunity.
In fact, that was my next question. You were one of the early investors in OpenAI, one of the most disruptive companies of our times. And, Sam Altman was in India as well recently. Do you think India can build foundational models? What's the opportunity for India when it comes to AI? What should India's AI strategy be?
Well, there's national governmental strategies, and those are different than what they are for startups. Speaking mostly to startups here, I wouldn't suggest you build as large a foundation model as OpenAI has built. It's been a fabulous investment for us, but remember, we made it 5 years ago when most people thought that was a silly investment in an odd structure. We fundamentally believed in the power of change and how much change this could cause. Today, there is lots of opportunity in running infrastructure for AI, even in India and for Indian entrepreneurs. I do believe, for example, that there'll be a new development environment for AI-based and language model-based development. So we've invested in Replit here in the US. It's a dev environment for LLM-based app development. So there is those kinds of opportunities. But the biggest opportunity, both on the consumer side and on the enterprise side, is in lots of applications that are newly enabled, rethinking old applications in completely new ways. It will be disruptive, but it'll be hugely large opportunities for entrepreneurs.
Got it.
So I'm very, very optimistic on the number of opportunities for entrepreneurs, and some of them won't take a huge amount of capital either. Applications can be very, very clever.
Right. Mr. Khosla, you're from IIT Delhi, and a significant number of founders in India too are from the various IITs. But we see very few of them doing anything in deep tech. Most of them, do consumer internet. They're doing 10-minute grocery delivery or, e-commerce or payments or something else. Why do you think that is? Is it a function of their interest or a function of what VCs look to invest in India?
Well, I think that's a problem with investors. Investors have been very cautious in India. So I find Indian investors value revenue too much and not building assets. And building assets is what deep tech investing is about. It's about, you build a fusion reactor, the design itself would be worth probably $50 billion or more. I would think a good reactor design with no revenue. That's what I call really differentiated building. But Indian investors are more focused on revenue and running a spreadsheet. I will tell you something surprising. In the last almost 20 years we've been investing at Coastla Ventures, there is not a single example where I've used an IRR calculation to decide whether to invest or not. That's how different our approach is, and it works well for deep tech investing.
Wow.
One has to imagine new systems. I think the other thing I would say is once there's role models of different kinds of investments. People didn't want to invest in e-commerce till Flipkart happened, and suddenly everybody wants to invest in Flipkart. So people look to have successful role models. But I do think there's huge advantages in India, both in deep tech because of the technical talent there. There's less academic research, but it's very easy to build global companies with collaboration with Western universities or Western professors. So there is a lack of that kind of investing in India, and there is lack of role models of that kind of success. And once that happens, I think India will have an advantage.
That's a very powerful statement, Mr. Khosla, that you don't use IRR to decide on what to invest in. There are a few VCs in the room, so I will get their reactions.
I will say, we don't use IRR. We've never used an IRR calculation. I can't remember seeing one in the last 5 or 10 years in our shop.
Right. Mr. Khosla, in the venture ecosystem, a phrase called founder friendliness gained a lot of traction in the years up to 2022. Now it seems to be receding in usage because VCs are now asking about profitability and corporate governance. How have the dynamics changed, and do you think this was overdue?
I don't think either approach, either too much founder friendliness or too much focus on what you said, revenue, etc., is right. A founder should be treated like your child. If you're totally permissive, you will spoil them. If you say yes to everything, which was the founder-friendly world, you will spoil them and you will do them a disservice. However, if you completely control your kids, they have to do what you tell them, they will not be innovative and creative. So the right thing to do is somewhere in between. You help them be better entrepreneurs. And that's what a good investor does, especially in the venture world. I think private equity is very, very different. And I don't love private equity as a way of investing because it doesn't really help entrepreneurs. My view is the right venture capitalists are venture assistants to entrepreneurs. They're much more an assistant, and they will help them build better companies. And they will tell them when they're doing something wrong, not try and be so founder-friendly that they don't even challenge them. I think good, healthy debate, challenging founders, whether it's good times or bad times, is the right approach, just like you would with your children, without controlling them or ever making a decision. I will tell you something else surprising. I almost never vote on a board. So I've stopped going on boards because I never vote on a board against a founding team or a management team. I think it's a bad idea for VCs to do that in private companies. In public companies, there's governance responsibilities, but in private companies, you should be much more about helping the entrepreneur build their company, think bigger, do more than they think they can do, those kinds of things.
Right. Again, wonderful analogy, equating founder to a child where you need to exert discipline and not spoil them, but also ensure that you mentor them well. Sequoia has exited. In a sense, they've retreated from India and China, saying that it's too hard to oversee portfolio companies across oceans. What do you make of this? Is this a reflection on India? Or is this how, VCs are moving globally, where it's no longer possible to oversee a global fund because every region has different dynamics?
My view is the Sequoia China thing is a very different factor. It's more about China than about foreign investment like in India. There is a techno-economic war between the Western world and China, and that will only get worse. And I'm very hawkish on not being friendly to China in all this, and I hope you don't have too many Chinese in your audience. But
there are none as far as I know.
It's very, very important that Western values align people. And I call it not American, I don't call it European, I call it Western values aligned philosophy versus the political system that enforces discipline through Tiananmen Square type tactics. Those are very different political philosophies, and to give credit to the Chinese, they believe that's a better political system. And I can see why they believe that, but I just want our system to win. And I think India is very aligned with Western values. In 2006, I wrote an op-ed for the Wall Street Journal when the nuclear treaty was being negotiated, and I argued India and the West are going to be inevitably aligned, and it makes a lot of sense. So I'm a big fan of collaboration between the two. I do think India can have more global companies, and what's happening with respect to China doesn't reflect on India. In fact, it enhances the interest in investing in India.
So in terms of your own India investments, are there startups that you're excited about? There are many founders in the room, so if they have to make a pitch to you, what should they, keep in mind?
Well, so the one thing I worry about in India, I have this joke, it's not really a joke. European VCs turn every great idea into a decent one. They avoid risk and increase the probability of success, but they reduce the consequences of success to almost inconsequential. I'm much more of a fan of building really big, ambitious companies, and that means taking more risk. It's not without its costs. There is higher failure rate, but at least the consequences of success are consequential. And I do think in India, there's a real opportunity to build not Indian, but global companies. We've started to see the beginning of that in enterprise SaaS and some other areas. I think it's also possible in AI. It's also possible in deep technologies in India, especially manufacturing technologies, because India's approach to manufacturing should be different than Chinese approach to manufacturing. So I do think those can be built. And I think once we have a few role models, it'll spur many more entrepreneurs to follow that path. So I hope that's what happens.
Right. Finally, Mr. Khosla, if you had to place a bet, who is going to win this digital cage war and physical cage war between Musk and Zuckerberg?
It's too early to tell. I'm smart enough to know when I don't know something, so I won't give you an answer. It does bring me to a very important point that is very important for entrepreneurs. Traditional investors look to studies about market sizes and all that stuff. I have mostly found experts are experts in the previous version of the world. And in the 40 years I've been working with innovation and innovation only, I have not seen a single example of a large innovation coming from somebody who knew their business, who was an expert in that business. Could you imagine a hotel chain starting Airbnb? Could you imagine a car rental company starting Uber? Could you imagine Boeing or Lockheed starting SpaceX or Rocket Labs? In 40 years, I haven't seen one example of large innovation. So to the entrepreneurs in your audience, what I would say is, if you don't have expertise in an area, you're likely to think from first principles. And because of that, do better than a lot of people with a lot of experience. Almost everything in fintech happened with people who had never been in fintech or banking. So don't listen to the pundits in the areas you're trying to change the world in.
Don't listen to the pundits. That's a great message. Before I let you go, what's the last question or what's the last thing you asked ChatGPT?
What's the last? I use ChatGPT a lot. I happen to have some very esoteric questions for my garden. So the last question was based on my gardening habits. I love gardening.
All right, Mr. Khosla, thank you very much. I know it's very late in Silicon Valley, but thank you so much for joining us. And it was wonderful to have you at the Money Control Startup Conclave.
Thank you.